Good morning, retail traders. This is the Sneaky Snake trading strategy where I talk about moving averages, chart patterns, and being in the now. I love my chart patterns. I love to catch the squeezes. I like to predict a squeeze, and that's all about this strategy. Being in the now, right now, I'm think we're creating a Darvis box and we're going sideways, and I'm a little bearish. So I'm more bearish than I am bullish, which means I'm going to be playing very defensively. We called the bottom last September. We called resistance at the head and shoulders, at the shoulder line, and we've called support at the 21 SMA on the weekly time frame. So now we're creating a Darvis box and we're going sideways until we get more bad news. And it's all back to the interest rates again. You know, it's a no-ending cycle with this economy. I've been trading 20 years. I've never seen anything like it. I mean, it's disgusting, but yet it can be very profitable if you know the market, know how to trade it, and know where we are. I mean, I really love this strategy that I created, the Sneaky Snake trading strategy, for buying at support and selling at resistance on these knives. It's a perfect setup for right now. So I want to go over trades that I made Friday, just in one entity, and that's the SPX. It's my favorite stock to trade. Now I trade, like I said, chart patterns, moving averages, and being in the now. This is the strategy that I'm using right now. I have many of them. This is the ready, set, go strategy. Tells me when I should take a trade, when I shouldn't. And then I also use my trend lines and support levels and using candlestick patterns. Now I did notice that we did have, a triple top here Thursday. And that triple top came back and found support off that triple top right at open. And this was the SPX on Friday. So I'm going to pull up my trading platform, which is the Tasty Trade platform. And my first trade of the day, I'm going to give you 6 trades that I took on the SPX. And my last one was the worst one that I took. It's the one that really, it didn't screw me up, but I lost a couple $100 on it. Should have been a little bit more smarter about it, but I wasn't. And that's what you got to be. You got to be smart about it and not try to overtrade. People will watch me trade. I'll get into a trade and then I'll forget about it. I'll walk away, go make a cup of coffee, and I'll come back and look at it again and say, hey, we got 3 white, 3 black crows here, man. This thing might be ready. Let's see if we can find another verification to take this trade. So Monday or Friday when I came in here, I let the room know. I said, man, we look a little bullish this morning on the SPY. And I think this can run off into the SPX because we had this inverse head and shoulders. That's not the right one, excuse me. Let me go back just a little farther here. We had this double bottom and then we bounced up pre-market. And this looked very bullish to me. Snake breakout, pull back to a double bottom, boom. So I let the room know. I said, I feel a little bullish right now because of the way we broke out this morning. So we're going to trade this a few times today. See if we can hold support and scalp it a few times. So right at, was it 8:47, I took the 44.80 strike call at 225. And then right at 8:51, 4 minutes later, I sold that call in at 225 and sold it for 280. Now on the chart, I'll show you the time frames that I took this trade on. So right at, let me see here, 8:47. Put my arrow up here. I think it's right there off the 51. 8:51, 8:47. There it is. I took the trade right here. And then at 8:51, 851, I got out of the trade in at 225 and sold it at 280. So that was not even what, 4 minutes. I made I made $60 or made, let me see here, $55 right off the bat. That was within 4 minutes. So that's pretty good. That's a pretty good wage. The second trade came in right at 909. $909. I bought it, the 4480 strike at $2. So right at 909. Oh, let me get my exit here. When did I get out of that trade? At 851. So we got out of the triple top at 851. 1, 2, 3 out. And then the next trade came in at 912 or 909. 909. And I got out at 912 with a credit. We went from $2 to 320. So within 3 minutes, I made $120. Again, this is at 909. So right at 909, I called out these 3 black crows. Right there. Took the trade there. And then 3 minutes later, and what time was this? This was at 912. I sold it. That candle right there. And then at 946, so that trade went from $2 to 320. And then at 946, I jumped back in it at 220, the same strike, 4480, the SPX. So at 946, right there, took the trade right here on this candle, double bottom, snake. And I think I said I was in a little bit too early on that one. And then right at 950, 4 minutes later, I got a credit. We sold it for 220 and I got out at 295, made $75 on that trade. Right at 950. So that was 946 to 950. In 4 minutes I made $75. You might not think this adds up, but it does. What was the time frame again? 946. I took that trade right here. I got out of it right there. Then I sold this one at 950, 4 minutes later. Right here at the top of resistance, which was a head and shoulders trend line. There's your head and here's your shoulder. So that's your exit idea. And on that trade, 220 to 295. Then the next one I took was at 1110, and it's the same. This is now I changed strikes and went to 44.75 because we had a knife, and I got it in at 190. So that's the 44.75 at 1110. So at 1110, 1110 right here. You got the snake breakout 1, 2, 3, and it pulled back, and I got in it right here off the 200 SMA at 1110. Right there. That candle right there. Then at 1113, I sold it for 240. I got in at 190 and sold it at 240. So what's that? 3 minutes later, got out of it right there. I mean, that's good money. From 190 to 240. And then the next trade I got in here, I bought 2 contracts, one at 175 and one at 130, within a 2-minute period, one at 1130 and one at 1132. And now, let me see here, 1130 and 1132. So right at 1130, I jumped in straight off the 200, and I bought more down here at 1132. Right in there. So I bought this one here and this one here, and then I sold it at the 200. So 1132 to 1142, I got out of the trade. Right there. Right there at the top. Took these 2 trades here, and then I sold it right there at that pop, which was a resistance level right here. See that support level? And it came across and found resistance. So I got out of that trade. And that, I don't know what that era, probably 145 average. And I got out at 210, sold them both at 210. And that was a 12-minute trade. So by this time I'm up pretty good. Then I got another trade right at 1208 to 1218, another 10-minute trade from 160 to 215. These are fast trades. I mean, I'm making good money by the end of the day. So this one here, now how'd I get 160 there? That ain't right. Let me go back and look at this. Oh, I put the price down. The time was at 1208 to 1215. 1218. 10 minutes. 1208 to 1215. I got that. Huh. 1208 to 1215. So at 1208, right here, I took the trade right there. That candle right there. A 1, 2, 3, and we dipped on down. And then at 12:15 I sold it. And that's right here at the 51 EMA. So that trade, I got in at 160 and sold it for 215. So that's a $55 scalp right there. And then this is where I started screwing up. I got in at 105, 75, and 25, had 4 contracts, ended up selling them at 5 cents at the end of the day. So that time frame on the chart, I'm going to show you my mistake. I got in here way early and they had that knife on me. I got screwed. Let me see where I got in at this. My first one was at 155. Right there. That was my first entry. I thought I was getting ready to have a breakout. Instead, we knifed. The next one, I got in at 159. That's right there. Then the next one, I got in at 219. And that's right there. Then I ended up selling it at 252. Which I stretched it as far as I could, but by this time, the stock had depreciated so much there was no chance, a possibility for a rebound. Now, on a good day, I think I could have probably pulled that out, but this time I was too far out of the money, and I just couldn't pull it off. So I ended up losing money on that trade, about $200. By the end of the day, I was up 250 something. 260 on this one account. I got many accounts, but that's the one I was trading the SPX on. So that was 6 successful trades and 1 bad one on the SPX. So I'm buying them at support and selling them at resistance, and using this strategy over here, ready, set, go, and trying to work and buy them on this trade. You can follow me live on YouTube. I also have a chat room. But we're doing well. We're doing well. So this coming week, I'm like I said, I've got my bear mask on. I'm going to be making some more trades. There are some good opportunities out there right now. I'm looking at the woke stocks. It's Disney looks very, very, very yummy right now. Coca-Cola looks ready too here in another week. We've got a wedge and a big long snake. So this thing just had 3 soldiers with a nice little reversal candlestick to the upside. So I'm thinking we're going to break this pattern a little bit, move to the upside, and maybe hit a resistance at the 50 SMA on the weekly time frame. Maybe even get out sooner at the 21, but she does hit the 50, and she can do it again if the momentum starts to pick up. They're pumping the hell out of Disney right now. Fat cats are. They keep bringing it up when it's at the bottom. I mean, look at this. Look at the 3-year low. 3-year low. Look at the 10-year. We're almost at a 10-year low. This is at a very sweet spot. I mean, if I was up to bat, and we have to start seeing a little momentum to the upside on this one here, Disney, I think you can at least get a good $5-10 out of this trade. Wokeness makes you go broke. Everybody's in denial about this wokeness crap. I'm not. And they say, well, the other companies are doing it too. I don't give a frick if they're all doing it. I'll trade what the market tells me, and wokeness will make you go broke. And that's what this company's done. I mean, look, ever since wokeness came out, it's been nothing but trouble. Now, they thought they could get this real fancy CEO in there and turn this shit around. They're never going to be able to turn around Disney until they go back to the way they used to be. And they're too far gone. They have to be. They need to change their name. Instead of keeping it at Disney, change it to wokeness. You know what I mean? But all these stocks have just been beat up. All of the ones that I call wokeness, in a way. And I've done some videos on this, and I think, you know, we're at definitely a support level. Wokeness, Target. Wokeness, Budweiser, still can go down a lot more. I mean, you call 95% of your brand out of touch. It's just not the way to do business. Politics and business don't mix. Wokeness. Now this is set up in snake breakout pullback Nike. I mean, this can go back down to a double bottom. I think it can even go lower, back down to $60. $60, $70, $66, somewhere in there. I think this can really get damaged a lot. Nike, especially with China and the world going into a deep recession. So that's just part of that. And then you've got the Apple, the Microsoft, the NVDA. We're definitely at a support level on Apple. Called this support level on Apple. Shoulder line support of inverse head and shoulders. And we've bounced up off that. That's on a 20-day time frame, 1 hour. Now these are the chip. You know, Microsoft hitting the 50 right now. I think this could probably pull back a little more. Maybe retest the 9 and then break out. Then we've got NVIDIA, which, again, you know, I just can't stand how they pump this stock. I mean, now we're definitely at a support level. But, I mean, we had a huge breakout on earnings, okay? Then we had another breakout on earnings. And by this time, I think we were already priced in. You've got Kramer and all these other idiots out there saying 650, 1500. When you're at a 3-year resistance on the SPX and the SPY. I mean, you're at a 3-year resistance. On a weekly time frame, you're at a head and shoulders right here. And I was the only one out there, me and I think Adam Koo were the only ones that called this out. Way in advance, before we even got there, saying that we're going to be hitting this head and shoulders up here, and I think that shoulder line is going to become a real hard resistance. So we're going sideways in these, right? We're going sideways. This here was a support level right here that I called out. And then I called out this here 200 SMA back in September. So we nailed this, and we nailed this. Now we're going to go sideways. And if we go below this trend line, then we're in trouble. We're in major trouble. And that's got to hold the 21 SMA on the weekly time frame. But if we go below that support level right there, maybe the bottom of this candle, we could be in a lot of trouble. And we could drop all the way back down here to this next moving average would be the 51 and the 65. And she loves that 51 and 65. So if it does not hold, and I'm serious, if it does not hold this 21, we're going to go back down to the 51 and find some support right around that 242.37 area, maybe a little bit lower, right about in here. No lower than that. 42.25.56. But it has to hold the 21. Right now we're above the 9. Let me see here. So we're still bullish as long as we hold that 9. If not, it's going to be a drop down to this trend line. And then that's got to hold. If not, then it's down to the 51. That's the SPX. So we're still going to be trading sideways. These are weekly. They're pumping this sucker. the NVDA to 650, and I'm just going, don't fall for this. We're at resistance. They're pumping the shit out of this market. Don't do it. These stocks have already had 300 or 400% runs on them. Do not do it. Do not fall for it. And when I say them, I'm talking about the fat cats, the people on CNBC. They've thought this thing was really going to fly back in here. I'm just begging people, screaming, don't do it. Don't fall for it. We're going to pull back. Buy a put. Let's at least take it back to the 50, to the 51, maybe even get lucky and hit the 65. We hit it here, I'd load the boat. I'd load this boat as much as I could put on it at 430. If we see that number, if we see it hit the 65 EMA, I would load the boat on NVIDIA. Disney, I already talked about Disney. Tesla. Whoop. Tesla's a tough one. There's so many bears, controlled bears on this stock that it just trips me out. One guy from Goldman Sachs says, I wouldn't be investing in Tesla because of China. This was back here a couple weeks ago. They thought it was going to tank on down, and I'm laughing at this guy. I said, are you serious? Why does nobody on Wall Street like Elon? He's the biggest innovator we've had for years, since Benjamin Franklin. I mean, he's better than Steve Jobs. I was an Apple fan for many years. And then Elon came, and I'm going, shit, this guy, he's all about green. Although he shoots rockets into the sky and he's got satellites all over the world, he's not a car company, he's a tech company. So Goldman Sachs comes out here and bashes his stock, says it's going to drop with QCOM, and I'm saying, are you people nuts? We run it all the way up to the 50. Now we're at resistance, we're squeezing. We got a symmetrical flag, so this could go either way. If we don't hold the 51, it can drop back down here to the 200, or maybe even to the, what is this? The 300 SMA. That's the 300 SMA. That's the 200 EMA. So if we don't hold that 21 or that 50 and we don't hold the 21, it's a fast drop down here, and good strong buy between 218 and 225 for Tesla. And then what else? Don't get caught in AMC. Don't get caught in splits. Recognize what a pump is. I've said AMC, when they had the split, I said, do not trade this stock. If you're going to trade it, buy a put. Look what it did. I mean, it knifed. It still is worth shit. I'm not a Hollywood fan to boot anyway. I haven't watched a movie in, hell, 5-6 years. I haven't turned my TV on in 2, maybe 2.5. I don't watch Hollywood, so that's not my thing. And I think that's about it. So I'm a little bearish over the market. There's a lot of opportunity. We're going sideways for right now, so don't. Make sure you're looking at your resistance levels. Mine, for example, AMD support above 100, if we can hold it. If not, it's an easy drop to the 200, which I'd probably load the boat at 93.59 if it decides to have a knife. All these stocks have had a great run. Real good run. NVDA 108 all the way to $500, and they're still pumping it. You got to take things in perspective at times. Okay? This was a great trade all year. I mean, I traded it almost every day. I mean, I made a ton of money on NVIDIA when I called this out back in September. But what I'm going to try to tell you is, when you run from 108 all the way to $500 within a year, it's too much. I mean, this thing can drop a lot. Don't fall for the hype. You fall for the hype, you're going to get in trouble. When you recognize something's up 400% on a year, and it's a big stock like NVIDIA, that's irrational exuberance. This thing could pull all the way back down to the support level at 373 if it had any sense. But for right now, the lowest possible support I see on NVIDIA is taking this here trend line from this to that and count to 3 and wait for it to hit that number right there. 1, 2, 3, boom. Set it off the 65 EMA because that's your closest to that support level. Alert. I bet you bottom dollar that we see 433.86. No one else is going to call that but me. Why? Because we got a head and shoulders right here. Inverse head and shoulders. Off the lowest possible support of 65. We got a bear flag right here. Friday. We're definitely on support right now at 51 EMA, SMA. And if it holds that 50 SMA on the daily, then we're fine. We can go ahead and bounce back up and find resistance to break right at 470.70. How'd I pick that number? Well, candle, 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 candle. I only see a candle, candle, candle here. Only see a candle, 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 candle. So there's more candles right here. And that's my resistance. It runs right into that trend line. So that's my double confirmation that that's a hard resistance. That'll be a 1, 2, 3 triple top break. Which triple top, that's number 3. We got the 50. We've got the trend line. We've got the triple top break. We've got an ascending triangle. So there's many reasons why that's going to be a hard resistance to break. We pulled back and hit the 65 on NVIDIA at 433.86. I'd load the boat. Maybe. Depends on being in the now and how the market conditions are. Right now you got to follow the trend. So that's it. That's an extra long video for sure. I wanted to go over how I traded in the morning. I went over my trades. On the SPX, that ain't all I traded Friday. Traded SPY, traded Tesla. So this whole new week's going to be a new week. Subscribe, ring that bell. You'll get live feed every day on YouTube for now until I decide I want to quit, which I'm sitting here for 20 years at this desk, 8 hours a day. It's getting old. Need some kind of incentive to keep me on here, and that's one way by doing that is helping me pay off the scanner for the month. and a free meal. That keeps me here. Just one free meal a month. That's all I ask. And to help pay off that scanner, and I share live. So if you're a beginner, I teach a strategy. I'm being a swing trader, a day trader, and scalper. And now I'm trading options. I make more money on the SPX than I have. Well, Tesla and the SPX are my two favorite profitable tickers. Have a great day, retail traders. Bye bye. See you Monday.